So, we're diving into a heated debate at the Fed. A top official, Michelle Bowman, is pushing for 3 cuts in interest rates this year, arguing that this month's disappointing jobs report only reinforces that need to stimulate borrowing and spending.
Right. And by cutting rates, the idea is to, make it easier for people to get loans for things like houses and cars, correct?
Exactly. The report actually showed that hiring was much weaker than most economists expected. That downturn in job numbers really bolstered her view that the Fed could, loosen up a bit, even though, of course, there's that trade-off with inflation.
Speaking of inflation, isn't it a bit risky to cut rates when inflation is still above the target? I mean, isn't there a danger we might end up with higher prices?
Absolutely. That's the balancing act here. Bowman's stance is that the latest labor data gives her confidence that cutting rates thrice this year could boost economic activity without, hopefully, pushing inflation too far out of control. But it's a tightrope. Lower rates typically mean cheaper money, but they can also fuel inflation if not managed carefully.
And then there's the whole tariff drama, Trump's tariffs, right? How do they play into this equation?
Yup, exactly. Bowman mentioned that she's getting more certain that these tariffs won't create a persistent inflation shock. It's like, she sees them as a temporary bump rather than a long-term obstacle.
Yeah.
Meanwhile, Federal Reserve Chair Jerome Powell is holding back, choosing to wait for more concrete data on how those tariffs, really affect inflation.
That sounds like a classic policy tug of war. One side wants bold moves and the other prefers playing it safe until there's more info. Is that fair to say?
Precisely. It's like the classic debate over whether to take an aggressive stance or to proceed cautiously. While Bowman and a fellow dissenter voted for a cut recently, 9 other officials preferred to keep things unchanged. It's a clear sign of the internal struggle within the Fed.
I can see the tension. And how are these differing views affecting market expectations?
Market chatter is already hinting that if the data keeps undershooting expectations, the next meeting in September might actually lean towards a rate cut. It's a bit like the economy is hinting at what it needs, even with all the political and inflation pressures swirling around.
Right. Sure, but I wonder if committing to 3 cuts is perhaps a touch overconfident given the current economic signals. Isn't there a risk that, overcorrecting could lead to unintended consequences like overheating certain sectors?
That's a valid concern. It's definitely a high-stakes game. Lower rates generally help consumers and businesses bounce back, but if inflation accelerates unexpectedly, the Fed might find itself in a real pickle.
Yeah.
The whole scenario is a delicate balancing act between encouraging growth and keeping prices stable.
And to add to that mix, Trump himself has been vocally calling for lower rates, even going as far as criticizing Powell. It's like political pressure meets high finance, isn't it?
Exactly. Politics and economics are colliding here in a pretty dramatic way. With Trump pushing for drastic cuts and Powell taking a more cautious wait-and-see approach, it underscores just how complex and unpredictable monetary policy can be right now.
Absolutely fascinating, and a real testament to the challenges faced by policymakers. I guess we'll have to wait and see how these moves play out over the remaining meetings this year.